Today I'll walk you through a trading session where I will execute only profitable trades. The ultimate goal is to constantly ensure that we're in the profit zone. Hello everyone, I'm really excited that you joined this episode. I'm Pony and it's a pleasure to make your acquaintance if you're seeing me for the first time. I highly recommend hitting that subscribe button. There's a lot of valuable and capturing and trading content right here. I'm a seasoned trader with years of experience under my belt. I manage a Telegram channel where I share my trading signals. If you're interested in collaborating with me, make sure to subscribe. And together we'll delve into the intricate world of trading. Let's kick off our trading session by examining the British pound against the Japanese yen pair. The situation here is rather intriguing. We have two instances of a double bottom forming. Without further ado, let's transition to our trading platform and initiate a trade in the upward direction. I will most likely opt for a 3-minute trade with an investment of $300. Let's initiate the trade for the upward movement. Let's promptly switch to a 50 seconds time frame. Here we can observe a distinct double bottom pattern that should work with a 100% likelihood. Meanwhile, you can take a look at the other currency pair I will be discussing. Moving on, let's consider the Australian dollar paired with the Canadian dollar. On the chart, we'll present it with a highly promising scenario known as a hammer formation. A hammer, as I reiterated, is a reversal pattern. Allow me to explain it once more on the simultaneously enter trade. A hammer is a reversal pattern that signals a lack of either buyers or sellers in the market. In the present context, we're witnessing a series of sellers while buyers are pushing the price upward. On the chart, a hammer takes the form of a candle with a petite body and a elongated shadow. This formation indicates that sellers attempts to drive the price down, but they were unsuccessful. Consequently, the price rebounded, leading to the emergence of a hammer. Now with the sellers fatigue, the price is poised at the surge upward as the buyers take full control. This movement should propel the chart to at least the 50% Fibonacci level, measured from this previous impulse. Moreover, anticipate that the price will even surpass this impulse entirely. Let's temporarily set aside this scenario and continue our assessment of other charts. Turning our attention to the US dollar versus to the Canadian dollar. This pair offers another intriguing setup, as we're witnessing an engulfing pattern. Essentially, it's like a straightened-out hammer over time. Let's proceed to open a trade of the USD currency pair for a downward movement on Western like $300 for a 3-minute trade. With the 3 trades already initiated, I'm actually engaging the market. Now let's delve into the intriguing pattern. Engulfing pattern. As observed, the red candle fully engulfs the preceding green candle, significant that the green candle's body is smaller than the subsequent red candle's body. This pattern is indicative of a reversal, suggesting that the sellers have disquieting overproduct buyers, depleting their liquidity and signaling the continuity of the downward price movement. Had this occurred during an uptrend, it would have signaled a potential upward trade. Given those factors, I'm confident about this trade. As all others are with a technical analysis and the trades themselves are already exhibiting profits. So let's observe how they unfold. Meanwhile, let's explore the British pound against the US dollar pair. However, there doesn't seem to be anything particularly compelling. The Australian dollar versus the Canadian dollar doesn't offer much excitement either. Chief and Japanese yen, currently this is what it considers a less favorable scenario. While there seems to be a double bottom pattern, it's rather unclear and requires a stretch of imagination. As the first trade is nearing a profitable closure, needing be like $185, and the second trade is also hitting for a profit, is area that a technical analysis is functioning seamlessly. Particularly impressive was the performance of the hammer formation. Overall, the hammer constantly signifies a market reversal. In the market, inclines upward after the hammer is formed is an occurrence that is exponentially rare. The hammer pattern boasts considerable strength, underpinned by coherent rationale. There exists a speculative and irrational technical analysis, as well as technical analysis grounded in logical principles. And once again, we find ourselves with a chief and Japanese yen. Should you summon your imagination and embark for a quest, you might discern the simple balance of a double bottom. While I'm not particularly inclined to enter this pair, it's worth observing this unfolding. Hence, two trades have already concluded in a profit, though the USD CAD seems poised to conclude at a loss. Nonetheless, let's maintain our focus on chief and Japanese yen pair, the meaning a stretch of imagination to ascertain the double bottom. However, my entry remains unlikely due to the inherent risk accompanied by the market veering towards a downward trajectory. An external force in extending our extensive upward pressure on USD CAD. Nevertheless, my gain already encompasses two trades. Even if it's a specific trade concludes with a deficit, I can readily offset it and generate a new profit. In trading, akin to any other profession, it's crucial to internalize that wins are intertwined with the losses. No matter the extent that one has experienced, it's impossible to assess that trading platform like Pocket Option and execute, for instance, 200 profitable trades sans a solitary loss. That symbol is not placeable. Every trader at times encounters losses. The key lies is normalizing their instances and pursuing one's spirits. Yes, one trade culminated in a loss, so be it. Let's proceed to scrutinize the next currency pair, guys. So, enter yen and CAD. I'm poised to initiate an uptrade with an offset of $600, significantly twice the norm. A recitation of the chart becomes, moreover, it's plausible to consider entering a downtrend upon the breakout, incorporating the support zones. So let's forge ahead. So now considering the British pound in tandem with the Japanese yen, here lies an opportunity for downtrend trade. Although a minor tier is present, one could construe it as a military level. I believe I comprehend the requisite steps. I'm initiating the trading platform and entering the fold with a $600 for a duration of 3 minutes. Or perhaps not. The markets comprehend the enigmatic at the present, rendering the identification or opportune scenario on others undertaken. Other currency pairs remain unremarkable, save for AUD and CAD. Incidentally, AUD and CAD has initiated a downtrend breakout. Consequently, I'm inclined to venture into the trade of this pair. I predisposed to initiate a downtrend trade considering the British pound paired with the Japanese yen given the emergence of the breakout. Additionally, a corresponding downtrend trade is offered for the Australian dollar in tandem with the Canadian dollar. In the event that these two trades materialize profitably, the trade that ended unfavorably can be mitigated and neutralized akin to its non-existence. Anticipating the robust downtrend movement, the trajectory is poised to be substantially downwards, bolstered by the breeze of steadfast support levels subsequent to robust impulses. Without a doubt, the previous scenario forecasts a robust, adventurous, and immensely impulsive downward trajectory. Similarly, the British pound vis-à-vis the Japanese yen reverses a parallel scenario. To liquidate, the initial pace of stagnation was succeeded by the advent of a downturn. These progressions signaled the trajectory of the chart. a persistent downward movement presenting the establishment of stagnation and ultimately culminated on a downward breakout, heralding a profitable closure. All that remains is to wait to culmination of both trades. I hold the belief that this trade is posed to conclude with a loss, prompting me to entertain the idea of initiating another trade with the amount $1,200, albeit without coverage. Let's regard this as a measure for reinforcement and hedging. To hedge potential risk, I'm initiating the initial trade at twice the initial amount. This precautionary move arises from the prevailing robustness of the scenario, which should ideally culminate with a 100% probability. The only conceivable setback could be misconclusion of timing and essential occurrence. In the until Audent can execute it closely with the price adhering to the patterns I sketched. A mere 40 seconds remain until the trade conclusion. It's executively improbably for this trade to incur a loss due to the unforeseen events. Considering downturn is a progress, posed to wide net profit of like $528, an unbelievable outcome. However, the British pound coupled with the Japanese yen choose to surge upward, an unwelcome development even not insurmountable. Merely seconds percent until the conclusion of the trade involving the Australian dollar and the Canadian dollar. The executed move worked splendidly. Voila, the trade concluded with gains, contributing over $500 net. The previous trade naturally concluded at a loss. Notwithstanding, I initiated another one for $1,200, posing the entirely offset the daily losses and ushered its profits. This improvement the classic technique among seasonal traders when equipped with knowledge and confidence, incurring 2 and 3 consecutive losing trades is virtually impossible. Thus, losses can be prevented effectively without an increases in position size. So, a trio of consecutive losses turns to effective notice, and perhaps only seasoned professionals in situations where significant news disrupts a comprehensive technical analysis. However, such instances are exceedingly rare. For now, let's simply beat up for time. A more 7 seconds remain. Naturally, the final seconds hated at my operations, yet the trade ultimately concluded profits eliminating approximately like $720. Today's cumulative profit surpassed the $800 mark. Thought I might have overlooked a detail. The day was both thrilling and highly lucrative. I appreciate your attention and comment you to watching the video to its conclusion. By responding, I'm confident you found it engaging and have given it a thumbs up. Remember to subscribe to the YouTube channel and become a part of the Telegram channel community. Let's establish a connection.